Republicans reject tax hikes, pushing cuts in their fiscal cliff counteroffer. Markets suffer an outside day yesterday as it runs into resistance. What type of move will this lead to? I'm Brittany Umar, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you Morning Call. Markets, of course, have been having a nice rally until yesterday's mini reversal. So, Scott, what do you make of the action?
I don't think it was that surprising. We were coming into key resistance. We were going to the 50-day moving average on the S&P. We were also bumping up against some major fib retracement levels, and we were also very overbought. We were plus 60-ish on the oscillator. So when you have all those things lining up, very tricky to initiate new longs. But I do think there were a lot of traders trying to stay with positions, and with yesterday's action where you open up at highs and close at lows, it gave us an excuse to pare down some risk, be a bit more flexible, and see what happens next.
Speaking of what happens next, what could this action lead to?
It could lead to retracement. The question is, what type of retracement? And, we've been whipped around by headlines over the course of the past 2 weeks, so I think it's kind of a good thing that, we saw remarks about the fiscal cliff, we saw the counteroffer by the Republicans, and it didn't affect the market that much. I think investors and traders are building a callus to the back and forth action where about I think a month ago, everyone thought we would get resolution to it and a compromise before, and now I think everyone's thinking we're just going to go over it and we're just going to deal with it.
So speaking of those headlines, do you attribute the weakness in the market to there not being any progress made in fiscal cliff talks?
Not really, because yesterday wasn't that extreme. It was pretty technical. It was very controlled. So I do think that we would like some kind of resolution to this, because markets love when we get rid of some type of uncertainty, and this is still one. But I think the consensus is that even if we do go over the cliff, it's going to be very short-lived. We're going to go over, it's going to be like Y2K, everyone's going to think the computer's going to blow up, nothing's going to change. And then within the first month or 2 quarters of next year, perhaps they'll get back together and do something a bit more substantial. So I think right now, just the media is just constantly just lacing in and making it the title of every headline that people are again getting numb to it, and we just have to really watch levels, which I think is a lot more important than watching the action.
Exactly. So what levels are you watching in the S&P, and how can we maybe use Fibonacci retracement to measure what we're seeing in the market?
The Fibonacci retracements are really good to look at the speed of the market, measure where we hold, because there's different definitions to it. You have a lot of different levels. People look at it differently. You have the 25% retracement, the 38.2, the 61.8, and then that's it. And if you hold the 25% retracement, typically you're in a pent-up tape. Momentum's there. It's fast and furious. If you hold the 0.382, it still shows commitment to the market, considered a very strong market. And then even the 50% mark just means that things are at a slower pace. And usually by the time you get to the last one, that's when everyone's just threw in the towel, and that's the level that actually has been holding recently over the past actually year and a half, when we've had some of those macro points in the macro charts. So at this point, I guess we'll go just real quickly to the micro and then maybe expand on the macro. So you go here, take a look. First things first, just to show you how you could really be tactical. From the high here, remember that high of 1474, all the way down to the low that we saw on November 16th. The bounce that we just had was back to the 0.618% retracement into the 50-day, right into prior, a lot of consolidation here, or just a lot of movement to get through. So with that being said, a nice spot to trim some longs and be a little proactive and really look to see what's going on here. So what happened was you had this outside day. We opened above the prior high of 1419, tried to get momentum left. So if you're playing for momentum, you leave. But look where we are in the scheme of this entire move. So the bulls are a bit spoiled. You can't just say game over because of this day. Last time we had a bit of an outside day right here, it led to another down day that wound up closing near the highs. So what you want to do here is map out levels. So you go to the bottom and you do it this way this time, to go from the low that started the rally to where we just paused. So that 25% retracement right now, which you should write down, is 1403. So if we trade below yesterday's low of 1408, we have about 5 handles just to get to this top, really strong one. So don't be surprised if we get there. Then you have the 0.382, which is 1393, which comes in right around here, which would be another higher low, higher than what happened on that day when they shook the tree. So these are the 2 days that I think that in order for us to get to 1440 or 1450 at some point into the end of the year, these are the levels that hold, and these levels will keep the same type of composure of the market. So right down 1403 and 1393, those are your key upper level momentum levels that could keep things intact.
Now, if we continue to look at the S&P during multiple time frames, if we really go micro and look at the 5-minute chart, what can we gain and learn about what we're seeing in the market?
Well, the micro just shows you that, with yesterday's outside reversal, and you put that on the actual bar that happened yesterday, it probably got a lot of just active traders out of the market, and some guys even short. We just took a bit of an intermediate level look at the S&P. So if we actually expand it and go macro, let me put up a chart and just show you something here. Okay, let's go to this very big chart of the S&P, because we just did the intermediate, and at this particular point, let's take a little bit of a look at the macro. So you go here and you will see that last time we had a move, which was the October lows, right, from here all the way to the highs. What wound up holding the 0.618% retracement, before the wedge and before we went again. So then if you take another macro look to show how the rally has stayed intact this entire time, you can go from the low of October 4th all the way up to the high of the summer. Remember that high right around here? And what held this time? We broke the 25, broke the 0.38, held above the 50. And then what do? We went again. So all in all, you could keep measuring on different time frames these fibs to see what your time frame is. As overall, it's been very healthy, and as a macro investor, it's been pretty, I wouldn't say easy to stay with it, but everything is held intact. So that if you take another look here on a more macro basis from the summer low, remember the summer low right here, all the way to the high, it wound up holding the 0.618. So you can never be surprised. If it's never game over until the last one breaks, and if you start too early, sometimes there's a lot of pain to get there. So at this particular point, you go to where we are right now, and you will just say that I think that at this point, you just can't be spoiled. We came back into resistance, and now go back to those levels that we just talked about, because they're a little bit more relevant for the end of the year. And you want to make sure you know exactly where these points are, and I'll give it to you one last time. You go over here, and this is just one outside day. You don't know what it's going to lead to. You don't have to if you got flexible. And here are your levels to write down and have on a piece of paper, because when you get to those levels during the course of the trading day, sometimes you're extra emotional and you won't honor them.
All right, well, coming up, we're going to go in the trenches with various sectors to check their temperatures. But first, a quick commercial break. We'll be right back.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back and checking the temperature of various sectors. Let's start with the Qs, which had a nice bounce but got rejected at the 50-day.
Yeah, at this point, we need to watch that closely, because the Qs is what let us lower. The Qs broke all their key moving averages well before the rest of the indices. That's what gave traders really some clues to lighten up before we broke 1440 in the S&P before the correction really began in October. So if you go to the chart of the Qs, you will see, you guys remember this head and shoulders top that came into fruition. Here was your left shoulder, here is your head, here is your right shoulder. This is when we broke the 50-day on, in the Qs well before some of the other indices. You broke down, you retested, got rejected, and then it continued lower. Here was your outside day. It had an outside day the same exact time as the indices. And then you had your gap up, really nice gap up. Pent up momentum, didn't even come and try and fill it in. Then you had another gap up, and I showed you how the spiders actually filled that gap. This one did not. The Qs was still showing pent up momentum and demand considering how low it came. So now at this point, you have an engulfing day. You have a 3-day range right here. So if it were to break below this 65, 61, I think you could use Fibonacci retracements here too. You could do exactly what we did with the S&P, grab a pen, write these down. You go to the low right here, all the way up to where we just topped out yesterday, or somewhere around there, and you have the really strong spot. which is about 65.18. And then I would think in order for this market to continue into year end and for Santa to come on his sleigh down that little chimney of his, this is the area that I would think would hold, which is about 64.51. So that's really important to me.
And it's also important to look at the financials for clues about direction. Yesterday, the XLF was sent lower by the market sell-off, retested its 21-day. What did that tell you about the XLF and financials right now?
They've been somewhat of a lethargic trade. I've been looking at them trying to get some type of clues, and they led us in a few different times this year after being a headwind for the past 2 years or so. So it was nice when they changed character and got stronger. So I'm waiting to see them get stronger again. And at this point, if you look at the XLF, you will see that it's in like a mini box type formation. So you go to the chart here, and you'll see again that it tried to break out and couldn't. Okay, so if we look at the chart and look at the moving averages, you will see that here was that resistance. We were trying to play for a bit of a breakout, and it didn't happen. But overall, it's still fine. Okay, it's still within these moving averages. I would say, to look for clues here. Here's now your defined resistance. If it were to ever to start getting back above this area, which was just say about 1586, that would be healthy for the market. It's in this little mini micro range. If it breaks it, you have to see then how it handles this lower level channel. It's not even a low. It's like this is like a mid-level channel within a bigger channel. So right now, actually, as I look at it a little closer here, it's just very noisy with a lot of people not exactly knowing which way to go with this, considering the size of the move that it had this year and really not much of a correction. So, I think financials are in wait and see mode. And if I could just give you one other, clue here, a barometer for some of the financials, Goldman Sachs, which helped lead this group higher right around here when it broke out back in August before the banks. Now it's wedging because, again, pattern of indecision, the same thing I just saw in the XLF, not knowing which way to go, above 121. With a nice close, it could start getting a motion to the upside. Below this 117, you could see some corrective action to the right, but that'll be a good clue in the next few sessions.
And the RTH has seen a strong rally since November 16th, helped by holiday shoppers, no doubt. Now, yesterday it did pull back. What support level does it need to hold to keep its momentum?
This has been very choppy, and it's been very name specific, and they've been taking turns where Walmart was on fire the whole first part of the year, and then it's been in consolidation mode. Target's had decent spots. You just saw Costco with the special dividend that set highs. And you look at the RTHs, if you're an investor in the ETF, it's in the game, it's showing relative strength, but it's not blaring. You go to the chart here, and you will see that you got into some very choppy action in October like the rest of the market. You did have a correction, but look what it did. It did not break the 200-day, which a lot of other sectors did, so it showed some relative strength. Now it is above the 8-day, it's above the 50-day. I think this actually, ETF looks better than the financials that I just put up. It looked stronger than technology. So at this point, the question is, at some point, can any group break above recent highs? So this is a group that you could look to see if it starts flexing its muscles and get some leadership.
And home builders back at highs after the recent rally. Where's resistance and support?
Well, yesterday it showed that it wasn't ready to get momentum. This has been a strong group. Every dip's been somewhat bought. Some stocks have traded better than others. At this point, if you look here again, the XHB, it's above the moving averages. Look where the 200-day was on this one. It never even thought about testing it, so investors did not have a lot of sweat rolling down their forehead during that correction. Then you had your gap up. And it's been like choppy. The whole market, this has been like a lethargic, choppy move at the end here. It's by the highs, so as a macro investor, there's still a lot to like in the home builders. Every time we get positive data, or a lot of the time, it's with the home builders. Toll, I would watch that today. It came out with numbers. It looked as if they were positive. It happened right before I got in here. For Toll Brothers, I would say if it can get above 33 and stay above there, that would help this group. Okay, then your next resistance comes in around 35. If the numbers weren't good and it doesn't hold 31 and goes to the downside, you'll see some more weakness in the home builders. So I would watch to see how Toll reacts to its numbers.
And metals have been weaker. The GLD has been out of play for a little bit now. What do you think about it now? Is it an avoid?
It's been a tough trade all year. There was like 3 days where you had something clean. If you looked at the overall macro chart, you will see with the GLD that, go up here and you'll see we had a really nice move in this metal, right around here in August. In August, it broke above this area led by silver, broke above it, was really strong, and it went right up to prior resistance and somewhat stalled. Gave you some clues that it might stall, some clues that it was going to lose some momentum, and then it had a nice move lower, and it held up a little bit. So for me, I was looking at silver as a trade. I'll just show you with gold. You look here in the GLDs, you will see that it broke above this 168.5, which was a clean move. Came in, I was at, guys were trying to stay long it, considering it was showing commitment, and then pow, sliced right through it. Did it pre-market. 168 was your stop. If you got stopped out, that's okay. Use your stops. If you want to look though at this a little bit closer, you will see that after this gap down, I'm sorry, my chart's a little warped here. They didn't even try and fill it. Guys didn't say, okay, it was just a 170. It's now below this 167. It looks cheap to me, and that gap is now in control of the direction. And here we are at support. I would say watch this, guys, 165-ish. If that doesn't hold and you close below it, you do have a major trend line coming into play that, if it were broken and you were a macro holder, I would say you'd be a little concerned. So I would just, watch to see what's going on here as it starts to weaken and not behave very well.
All right, time for some quick hits here. Apple was rejected at the 594 major level yesterday. How can we measure its strength heading into the next couple sessions?
It just had a really nice move. Went 505, the red dog reversal was 522, went all the way up to 594 and change. There is this upper flag type range. I'm not long Apple right now. I think since November 16th, I've been long at 90% of the time, and now I'm in wait and see mode because I'm not sure, and this will help give us clues with technology and the market. You go to the chart right here, you will see that this was your red dog reversal right here at 522. He was your first move up, showed commitment, held the top third, continued. And now if you want to look at it a little closer within this range, I think it's pretty important. I know it's more of a micro view, but some people do trade on the micro term. Yesterday, couldn't get through 594 and change, couldn't reclaim this or even test this higher resistance. So the question is, that out of this new intermediate range, what holds? Okay, you have 572.26, which I think now this 572 is going to be pretty big support. And then you have this upper level that if it holds above, I would say 582.68 or 582 and goes sideways up here, it'll be better for the market, and there'll be a higher probability it breaks above the level it couldn't get through yesterday. It might do one of those red dog reversals where it breaks below this, stops people out, holds the moving averages, comes back up, and then continues in this range for a while as it works off this big move as we head into the holidays. So right now, it's going to be a little bit of tough money. Sometimes there's quick money, sometimes there's fast hits, and this one's a little bit longer, I'm sorry. And sometimes you need a little bit longer in order to let this absorb. So at this point, I think it's a little bit of a choppy trade. Guys who were trying to trade it yesterday, they were getting a little chopped up. I got stopped out. I said, I'm going to sit on the side, and I'm going to see, does 582 hold? Does it play around that pivot, or does it work its way back down to 572? And that'll be a major area for momentum players to see if it holds.
All right, you get one long hit in quick hits. How about Facebook? Your classic example of why entries and exits matter. The stock closed down 3.4% yesterday. So what'd you make of the action, and what now?
I think it was a nice targeted long above 24. It stretched further than people thought. You had a classic outside day yesterday. I actually got out of my longs. I flipped short. To be quick, you go to the chart real quickly and you will see here is when it changed. You could have sold some strength or waited till you had like a 30-minute close below this 28. Closing the lows. It's up like 10 cents today. If it shows some relative weakness today, I think I might even add to my short below 26.98, and then I think I would be a cover in the next few sessions into this 26.40 area. And then if it holds there, who knows? Maybe we revisit it as a long. It was a nice long, but look where it really came from by that lockup from 20 all the way up to almost 29. A rest is due, and yesterday it was a nice, cute cash flow trade, and let's see if we can get a little bit more.
Bank of America failed at major resistance yesterday, but held above its 8-day. Is this new support level?
I would say like 945 for macro holders. That should be your out. Everyone says, what's your stop? Guys who were looking to play it for momentum yesterday, it just didn't go. I added to it. If you look at the chart here, I thought perhaps yesterday was a day it was going to break above this 995.10. It didn't happen, so I took off my momentum shares, but I'm still long it. So here's one level, 976, and then you have really 938. You take a look at the weekly chart again for guys that are more swing traders. Still very tight, just not ready to break above there. So this would also give us some clues that if Bank of America finally get above 10 and hold above 10, that would be a healthy situation for some of the banks.
And Amazon showing weakness yesterday after a nice rally since November 16th. Do you think its 8-day will get tested now?
Yeah, I think that a lot of people have been trying to short this because, you know, it went from a really strong stock and a good long, and then everyone tried to get cute and flip. You look at the chart, it had a very fast move, and you did get a small outside day here, so it's up a little bit. Some guys will say if it could break below yesterday's low of 250, they can add to it for cash flow, and then I think, you know, nice support here where dip buyers should come into play would be 200, 245, 51. So, you know, tactically, if it breaks below yesterday's low, I think we can see some follow through down to that 245.
All right, and quickly, what's your focus heading into trading today?
My focus is to see, you know, what type of move we get today or tomorrow. You had your small outside day yesterday, and, you know, sometimes it leads to more weakness. The question is what type of weakness. We went over in the call what we could see as clues, you know, which way maybe Goldman will resolve. Can Bank of America above 10? Can Apple hold that upper range? Do we see a trade below yesterday's low on Facebook for more follow through? I think at this point, you know, I was really positive, and then I went to neutral to positive, and then after yesterday, I'm a little neutral to negative until we work that oscillator down to neutral, and we, you know, figure out that the market could prove that we could hold above some of those higher Fibonacci retracements, which we spoke about, which was the 25% and that 38.2.
All right, that's it for us today. Happy trading, everyone, and have a great day.